Welcome to Citigold series on all things investing. On this episode of Demystifying Wealth, we are covering yield curves. Yield is the expected return on an investment, or in case of bonds, interest received from holding a security. A yield curve shows yields by maturity. Typically, it depicts average yield on short, medium, or long-term maturity investments on a given day or week of trading. Therefore, it is very important to take note of exactly which yield are you looking at while making your investment decision. A bond is a debt or part of a debt in an underlying loan relationship that can be bought or sold. A bond yield is therefore the return an investor will derive by investing in a particular bond. This is usually expressed as a percentage, and it is calculated by dividing the annual coupon payment made to the investor by the bond price. Because of this, bond yield and bond price have an inverse relationship. When the price of the bond goes up, the yield falls, and when the price of the bond falls, the yield goes up. Yield curves are usually upward sloping, which means a higher fixed rate of return could be earned when you buy a bond with long-term maturity. In general, short-term bonds carry lower yields, which tells us that the investor's money is exposed to less risk. However, bond prices have an inverse relationship to interest rates, so long-term bonds are more sensitive to interest rate changes. Due to this relationship, the yield curve also gives us an insight into inflation, growth, interest rates over the medium to long term. If a yield curve tends to flatten, it can be a sign that investors expect interest rates are going to go up in the short term and have lost confidence in the economy's growth outlook. An inverted yield curve may point to an expectation of an upcoming economic slowdown, usually seen as a leading indicator of an upcoming recession. As you can see, looking at yield curves can tell us a lot about the future of our investments and returns. However, remember to always look before you jump. We at Citi simplify investing so you can get started early. Take the first step, talk to your relationship manager today.